welcome to Masters of Real Estate. Today I have Haley John on the line here, one of my good friends from one of my mastermind groups that specializes in multifamily assets and has been doing this for a long time and has some unique perspectives of how to operate these things as well as what's happening in the current market. So I'm excited to talk about this because multifamily has taken a hit over the last few years with changes in interest rates and things like that and major volatile markets. And so it's interesting to get a unique perspective that someone is in the market for as long as Haley has. So thank you so much, Haley, for coming on the line today. I appreciate it. Can you give a little bit of background on what got you started in this space in the first place? You know, buying these big multifamily buildings around the country is pretty exciting, I think, for most people, and something that just seems out of reach for so many people. They think, hey, let me go buy a single family house or a duplex, or let me do a fix and flip. They don't think, let's go buy a giant apartment building, you know, from the start. So I have to commend you for going into that space, and just would love to get an understanding of what pain pushed you into going that big, you know, into stuff like this, and what your experience is.
Yeah, awesome. Well, thank you for having me, Matthew. And you know what got me started in all of this, I was working really hard like most people do, more than 40 hours a week. At the time, I was in commercial brokerage sales, so selling commercial real estate.
Yeah.
Yeah, no one trusts you, no one likes you, no one wants to do business with you. You have to earn that trust, you know? So it's a tough gig. And my husband, he's a physician, and I remember we were sitting on the couch. I remember that exact evening we were talking about something's wrong here. The more money we make, the more we pay in taxes. Our 401k was like up and down and slow, and the stock market was up and down, and our kids' college savings accounts were just like barely growing. So we thought this can't be how the top 1% and higher actually do things. This doesn't make sense.
Something different, right?
Yeah, so then a friend of mine, gosh, for the last like 2 or 3 years, he was saying, Haley, you need to sign up for this seminar. It was at the time with Brad Sumrock. You need to sign up for this event. And I was like, whatever. I'm doing single family homes. I'm fine. He goes, no, you need to do something bigger. And I put it off for a long time. Finally, he said, all right, Haley, I'm going to book, we were on the phone with each other. He said, all right, Haley, I'm going to book this for you as a Christmas gift. And I said, no, don't you dare. I'll book it right now. I'll do it right now. So I'm on my phone, sitting in the car, and I remember. I booked the ticket. We go to the seminar. My husband's sitting on my right side, and we're learning about the tax benefits of investing in multifamily. And literally I see, and for some early story here, my husband at the time, we were paying lots and lots in income taxes. And my husband is originally from India. He's been in the U.S. for over 20 years, but he would always tell me that it was his duty and his honor to pay taxes. He loved paying taxes because he loves America and he loves his freedom. Really like grateful dude. But I remember in that seminar, he was sitting to my right, and we were newly married, and we found out that because we file our taxes jointly now, that we could take benefit of bonus depreciation and all the tax benefits that multifamily has to offer. And I swear to you, I saw stars in his eyes. So
He's
I'm
like,
glad.
wow, I can save how much in taxes every year? That's insane.
Right, so I went from working for 40 hours or more per week to make X number of dollars to working the same amount of hours, and what I was saving in taxes was double what I was earning from earned income.
That's
so
awesome.
that was a huge thing, and I always make a joke with my husband of like, I'm glad that we found out about this after we got married, or he would have married me just for that.
Yeah, that's true. You're like, what is your real intentions here? Is it really just tax savings here? So that's.
I remember when I first learned about this, because it was still like what Trump did back in 2017, the Tax and Jobs Act. When I learned about that, I was telling all my single friends, dude, put this on your dating app. That like if you're a real estate professional, that you can save everybody in taxes.
That's hilarious. You'll get the cream of the crop too, because then you'll find people that are trying to save on taxes that really focused on that and make a lot of money. So that's a genius idea, actually. So, so you hear that, realtors? Go put this, realtors and real estate professionals, that put that on your dating app, and you'll get a higher quality of people coming through probably. So that's pretty awesome. So when you first started in multifamily, how'd you pull that trigger in the first place? Because going from single family to like some big multifamily building, or at least and pushing in that direction, how did you kind of make that leap in the first place? And people think, oh wow, well all of a sudden the numbers get really big, right? And now you got to raise a lot more capital and stuff. Did you take transition steps to that place? Did you have team members? How did you be able to kind of bridge that gap in the first place to get there?
Number one, you have to have a mentor. Once you can see someone else do it, then it's like, oh, okay, I can do that.
Right.
As long as just what's my next
Helping
step?
the formula. Right.
Done. What's my next step? What's my next step? And that's number one. And then number two is networking and finding the right partners, because we didn't have enough net worth and liquidity to buy our first deal. It was $16 million. The down payment was $5.3 million.
Wow.
We don't have $5.3 million, but also we don't have enough net worth and liquidity to get approved for the loan.
Right.
So we intentionally did some networking and mastermind groups, and we found some folks that are friends and partners to this day, but we would not be able to do it without our partners. So it's like a jigsaw puzzle. A certain amount of net worth. We know one partner has a strong net worth, one person has strong liquidity, maybe someone has boots on the ground experience, and you have to piece those things together because that's what the lender requires. So you got to take a moment to think for yourself, what are my strengths and weaknesses, and make sure you have partners plugged in to fill those weak spots.
I think that's a huge thing to understand, because most people think in their head that they have to go through and do all of this stuff themselves. They got to bring the down payment, they got to do all these other aspects, but you really should be looking at your unique skill sets and what you can bring to the table, and then picking your team out of who you really want to do business with and bring to the table that have different operational skill sets, capital sources, liquidity and net worth requirements, understandings, and their own detailed skill sets and experiences to bring to the table all together. You have a much higher chance of success than learning the ropes yourself and trying to get punched in the face every single time, which is really what's going to happen. You're going to get punched in the face enough as an active operator, and I think that's one thing that most passive investors don't fully understand. People think, I got to go do all this work, I got to go and qualify for the loans, I got to do all this stuff personally, but really they don't. They could just rely on an operator like yourself that does all this work for you, helps you qualify for the loans and do the work and put all the other extra capital stacked together, because most people maybe have 50 grand or 100 grand or a couple $100,000 that they want to put into a deal or something like that, and they don't have $5.5 million or something to come put into a project or something. So being able to rely on an operator that has that experience is something I think most passive investors overlook as far as what the value is in working with people. They might think, oh, I'm giving up a percentage of the return. Actually, you're going to make more money than you would make yourself being an active operator and not have to do the work, which is insanely interesting. From it's what really drove me to invest passively in real estate as well, and multifamilies like this. You see the same thing out there with your investor clients and things like that?
Yeah, absolutely. I remember getting onto my first, I don't want to use a bunch of terms that people don't understand, but my first deal where I was a co-general partner, so basically I wasn't doing everything. I was raising capital mostly to bring to the deal, and then just doing a couple other tasks. So I wasn't really doing the asset management.
Right.
And my split, how much I would get paid, would be very, very small. And in the beginning, that kind of pissed me off a little bit, because it almost made me feel like I wasn't valued, because I didn't really understand all that happens in a transaction. Right. And over the next 5 or so years, over the whole period. And now looking back, I would do that over and over again, because their expertise is so valuable to me that I can learn from them. That is really worth whatever small amount of compensation I can get, for sure.
Yeah, you realize the asset management piece of this, right? The qualifying for the financing and putting the deal together and getting it closed, and the massive amount of due diligence up front, the back-end asset management long-term on this deal on top of the property management and everything is significant workload and significant risk also across the board. And so being able to go through and have team members that do that work. I used to own a property management company. I don't wish asset management or property management on anybody. It's a really difficult thing, and not easy to dial in when you're talking about hundreds of tenants you're dealing with that all have different problems. And so what you're doing when you're stepping into an asset management role is you're solving problems on a daily basis and moving through those issues and doing proper reporting to your investors and going through and managing delinquency rates and your business plan and things like that. It's very, very inclusive, and shocking that when you start to dial in how much workload it really is.
Yeah, and chances are, if you don't know how complicated it is, that means that you don't have a lot of experience. The more you know, the more you understand you don't know.
Right, and you also can understand your own inefficiencies. Like when we owned our property management company, we would take hits because of our inefficiencies and cover it for investors and things like that if we made a mistake. And then we realized that, hey, outsourcing the property management, I was making the same amount of money off of that property management business, if not way more, from having a better, efficient manager that is bigger than us, that has better systems, in-house trucks, in-house crews, in-house construction. The property management function of these things is very difficult to dial in because it's just like any business. You need to be proficient in accounting, investor communication, leasing, communication with tenants and service calls and delinquencies, and there's so many facets of it that go into that make it a difficult process to run and being as efficient as possible. And until you get into enough scale, it's not really that profitable just to solve problems for these companies. So how do you guys do that within your company on the asset management side of this and be able to run this efficiently as you guys do?
Well, multifamily, they've been hit hard. We've been hit hard for the last 2.5 years, so we've had to really get creative. Obviously, we can only control so many things, like insurance and taxes. Those are two big categories that got hit really hard for the last 2 years that are quite uncontrollable. Taxes will protest and litigate like anyone else. Insurance, we were able to utilize like a blanket policy, and because of our properties being located in lower risk areas, that actually helped quite a bit. But we really focused on more of the controllables and getting creative. For example, we have 252 unit deal, and the property management team, quite a large property management company, they have a build to rent client coming up about 2 miles away. So you imagine new build to rent homes. There is no leasing office. There's nowhere to put staff.
Right.
So we're going to be sharing some of our staff, not all of our staff, but one inside person, one outside maintenance person with that build to rent community. So that's going to cut our payroll by 30%.
Oh, that's great.
So just really exploring what can be done, what is controllable.
Right. Yeah. With changes in interest rates that we've seen happen over the last few years and that major uptick, a lot of people were in a position, and it's hard to not be. If you've bought in 2020 or before the rate increases occurred, and then those rate increases happened, then your business plan on the back end as far as refinancing after your value add, where most of these times, of course, when you're buying a multifamily, you're going in and increasing rents, you're renovating units, you're bringing the park up to par to be able to be more operationally efficient and reducing expenses as best you can, of course. And the whole goal is to increase revenue and then refinance and pay back investors as much capital as possible, if not all of it. And in some cases, it's not possible to give back all of it, but it depends on how much of a value add it is. And then in some cases, it's just to hold it long term from where it is and just add value to that specific facility and increase that revenue. But on the back end, in a short-term bridge loan situation, you end up with these rate changes that, of course, caused the ability to refinance be much more difficult at the same refinance rate and terms that you had previously. And so it puts you in a bind where all of a sudden your business plan has to be shifted. How do you reduce expenses further? How do you maintain occupancy and continue a rent growth in a challenging rental market or something like that if that changes, right? These are some of the things that happen during any business plan that's going to change. And a lot of people have seen it lately, of course. And how are you guys navigating that right now in this situation with regard to deals that maybe are going sideways now or going up and stable but not hitting the same level of projections that you thought because of that rate changes that occurred? Are you guys able to mitigate some of that risk and help find a solution? Because it's all navigating these solutions, right? That's what makes a good operator is when these things happen, the solutions that they can help navigate in different ways and try to push forward. Sometimes there is no solution. It's difficult, right? But what's your thoughts on that, how people have handled that and how you guys handle it?
Focusing on what you can control, so controllable expenses, getting creative, which I already mentioned. Working, if you're trying to refi out of a shorter term loan, really understanding what your benchmark is. A lot of people say you have to have a certain amount of net operating income to refi. Well, that might be really far out of reach. So what's something more tangible that our operations team can focus on? And so I love getting a net rental income target and telling the team, okay, here's our net rental income target for the month. We get T1, just 1 month of that, we're ready to send it to the lender. So how
Awesome.
can we bridge the gap to that 1 month of net rental income? And I feel like just focusing on something more simplified is a lot easier to communicate with the operations team, with the management team. And that's what brought us to a successful cash out refi, actually, that we closed on a couple weeks ago.
That's
October
awesome.
31st.
That's
Yeah,
so,
it feels
I love
really good, especially not to pay into refi, which most people are.
Yes.
The only reason we did that is because we focused on driving that net rental income as high as we could. So all of that counts towards your proceeds.
It's really interesting when, don't you love it when a plan comes together and you actually are able to implement that strategy? That's super cool. And I think now with the changes that have occurred in the market, there's a big opportunity moving forward for multifamily specifically because rates have changed. You've already got kind of a stabilized rate right now. Maybe it's a little bit more volatile because we don't know what's going to happen with the Fed and stuff like that, but it's much more stable than what just occurred, and a lot of price changes have happened because pricing needs to work for buyers, and it takes some time for sellers to kind of catch up mentally with what change occurred in the market if they do have to sell right now. But what's your thoughts as far as the positives moving forward for multifamily, and what do you see on the horizon right now?
So I like to say that, well, and it's true, that if you look at the up and down curves of real estate or the stock market, the cycles, right? Commercial real estate assets are all at a different spot in the cycle at a different time. Whenever the market was fine and dandy up here, multifamily and office started trending down first. So they're a little ahead of the curve, so to speak, going downward. And so right now I feel that multifamily is in the bottom 10% of the market, the bottom 10% of that curve. So I say it's go time. Like, yeah, you can wait a little bit longer, but
Right.
waiting's not going to help you any, because once things pick back up, you're getting 25 offers for every seller. Whereas now you might be getting 4 or 5 offers for every seller. And all that competition, all it does is just drive the price up and up and up. So right now we're seeing prices down 20 to 30%. Think about that. Like from 2022, the first quarter of 2022 to today, you're getting a hell of a deal. And
Absolutely.
it's only going to go up from now. And think about also like supply and demand. That's what controls price. We have very little supply coming to market over the next year or two. Now that Trump has been elected, there's going to be tariffs. Like I feel like it might be a little bit harder to build, and I think that really works in our favor in multifamily.
Yeah,
Also,
you have less supply coming on board from it.
there's some gossip going around that maybe he'll bring bonus depreciation back. And if he does, that's one of the reasons multifamily has been so popular the last 5 to 7 years.
Right.
Because of the stellar tax benefits. So if that comes back, I mean, cap rates are going down, the demand for multifamily is going up, and if you can buy right now at a 20 or 30% discount, you're like, I swear to you, like a year or two from now, people are gonna look back and be like, yeah, you're the smart one.
Yeah, it's funny that this is why people say that you need to run towards something when everyone else is fearful, right? Because you just went through, the entire multifamily market just went through like a downturn, because of the rate changes and things like that in the market, and now there's major opportunity on the table. So being able to go through and document this and see the flow of the chart you just talked about as far as where are we at with regard to pricing right now in multifamily, and figure that out lends you major opportunity in the future to be able to take advantage at the right time and focus on this, because there might have been a downturn in the market, but now there's way more upside potential. Like it's like in 2006 I lost pretty much everything when the whole market crashed, and then I realized, and I was sitting on the biggest gold mine in 2000, 9, 10, 11, 12, when it was, or even 12 mostly, when it was near the bottom of the market, where it was just going to be a shoot up trajectory, and there was so much opportunity that was coming from that and going forward, because pricing took such a hit, it made the assets much more attractive. And this is what happens with the market. You got to be ready to pounce when that change occurs, and be aware of them and looking at those economic indicators that you look at to be able to take advantage of that opportunity, or you're going to miss it. And you could have went through and in the last few years said, oh my God, multifamily is so difficult, it's hard to deal with, and everything, but now you're focused and saying, well, wait a minute, I just went through some pain. There's so much more opportunity on the other side of pain, typically in business and in economic cycles, that it gets kind of exciting.
I'm excited. I'm ready for the opportunities.
So
We're actually looking at two opportunities, two deals under contract, one in Dallas, one in Phoenix.
Nice.
So fine, it's our first deal in 2.5 years.
That's exciting. So yeah, you're waiting for that right time and that right piece. So having that patience is difficult when this is your business, to push on, and that's super exciting to get a couple under contract like that to move that forward and see a business plan that's viable. So after that much time,
It's very refreshing. Yeah.
And what makes these ones attractive? Like what is the goal with these assets as far as value add and different strategies that you're implementing on them?
The discount, the cost per unit.
Okay. So and you're seeing upside potential in rents and that kind of stuff in these areas as well, that you can implement that?
Yeah, and we're even doing conservative underwriting and putting like no rent growth in year one.
Okay.
Even though there's probably going to be some. But the last 2.5 years taught us something.
Oh,
It taught
yeah.
us to plan for things to go wrong.
Yeah.
So even with conservative underwriting and getting a huge discount, that underwriting is only going to improve.
And I think this lends perfectly to understanding from a passive investor standpoint. These are the things that operators go through that they're shielded from, right? The ups and downs of the market and the changes and things like that. They don't have to worry about this, and they can just invest passively, get the bonus depreciation, diversify with different operators in different markets of the country, get to invest in giant multifamilies that they don't have to do the work for and not bring all the capital to the table for at the same time, and rely on operators that already have that experience in the first place, that they don't have to go through the learning curve to be able to invest in these types of assets. It's shocking to me that most people don't understand these things and don't understand that they're available out there, mostly because that's what people have been taught is stock market investing. You got to invest in stock, bonds, mutual funds, and things like that, which you really don't have a lot of control over like you do in the real estate space, where you can force appreciation and force value add, and it's a lot based on experience in operations that gets you there, right?
Yeah, talking about experience, I like to think about your dollar per hour. If you have to do a deal on your own and figure out how to do it, you're going to spend a tremendous amount of hours. So all that does is bring how much money you make per hour down, because you're spending more hours. But
Right.
if you can invest passively with someone who's been doing this for years or decades, that's only going to grow your dollar per hour, because you're going to spend your hours working and making money and doing other things.
Right. When I quit my CPA firm job, it was something that I, look back on now that I'm like, that paycheck would have been nice, at the same time, and just quitting to jump into real estate full time head first. I kept thinking, I'll go back to the CPA firm, no problem if I have to, but that was hell. You don't want to go back, so, but at the same time, having, if you love your job and you're making good income doing this, keep that consistent income stream, and then invest passively to where your passive investments cover all your monthly expenses. Then if you don't want your job anymore, you can quit at that point. I didn't have kids and obligations at the time, which a lot of people have those obligations, and you shouldn't be taking that kind of risk if you have kids already, or you have a family unit, or someone that, people relying on you, on that side to be able to do this. And so I think people need to consider their own risk tolerance levels and things like that when they're investing. And a lot of people don't realize that, hey, if you leave a job and go into another job, you usually get a bump in pay, but then you have usually an old 401k that you can actually self-direct into real estate as well. We have a lot of clients that actually do this and self-direct their own retirement into real estate too, and these different strategies. Do you see a lot of that happening on your side? So,
yeah, absolutely. And a lot of people don't realize they can use it. So
Right.
once we realize that we can help them unlock that money, then it's like game over, because it's a no-brainer. Their 401k is just not moving the way that they want it to.
Right, and they might have stock increases and increases in their portfolios during up cycles, but during down cycles they take massive hits and don't have that level of stability that real estate can bring over the long term to the market. And it's just kind of like, to me, it's riskier because you don't have like any kind of control over that, and that decision making ability to invest in specific things that you want to invest in. And I think when you look at it, they don't necessarily produce the same cash flow returns as real estate does. And so a lot of financial planners can't necessarily go through and build this portfolio for people that is going to they can live off of during their retirement years, versus real estate can be a very much of a cash flow play where you have some stable cash flow coming in consistently on an asset long term that they can draw off of and live off of during retirement instead of depleting the principal. So meaning die wealthy, don't, and leave your assets to your kids or your family and people like that, instead of basically living off of your entire retirement and dying broke and worrying if you're ever going to have enough to live off of for the rest of your life if you live too long. A lot of people are in that situation, and so being able to plan for this now is very key. We called it previously the OCG retirement program because we're having cash flow assets inside people's retirements so that by the time they retire, they have a cash flow stream that covers them, right? And that's the whole idea behind this, is keep that stuff compounding and compounding to where they can cash flow long term. So do you have a lot of people that have that confusion on this, on the IRA side, or the different strategies they can invest in with you, or different ways to invest?
Most of them have no idea how to do this. And so
Right.
what I do is I connect them immediately with one of our trusted advisors, and they take care of it from there. So it really requires education because they have lots of questions like, well, am I going to get taxed at a fee, or am I going to have to, break this up? What happens when I sell it? And so it really requires more education, more than what I can give or should be giving. So I make sure that I connect them with our trusted.
Awesome. So I'm gonna get a little personal with it, Haley, right now. So I want to talk about what's driving you towards doing this. What makes you want to invest in real estate like this and help other people do the same thing? What is your why behind all of this stuff? What do you think the primary benefit to the world and society is with this stuff that you're helping people with? What's your driving factors?
It's such an awesome question. I've been a part of coaching for over a decade. And they
Awesome.
always want to figure out what your big why is, because that's how the coach is going to talk to you and motivate you, right? To tie you back to why is it that you wake up in the morning. And I struggled with it for a long time, like hitting my head against a wall. Like I wanted to do something big, but I couldn't figure out what that was. And a lot of people, especially with kids, will say, oh, well, it's my kids. Well, what else? No matter what, you're going to protect your kids. You're going to be there for your kids. You're going to do great things for your kids, but like what else? Like think bigger. So finally I was listening to a TED Talk. I guess about 5 years ago or so.
Okay.
I was listening to a TED Talk, and this person is talking about 3D printing homes. And this was before there was actually talk of 3D printing things. But they specifically do a nonprofit. And they focus, at the time they were focused in Central America, and I think they're still focused there, but they can 3D print homes for homeless families. So they have children, and it's like $3,000 to $5,000 or $3,000 to $6,000 per 3D printed home. So I said, okay, that's it. At first I thought I wanted to create my own company, and I was like, well, wait a minute, if it's for profit, someone else is doing it. Let me give it to them. So that's what I want to do. I want to donate an entire community of 3D printed homes in Central America.
That is super awesome. I have friends of mine in the military that go down and build houses in Mexico all the time and do things like that. And when you can give back to your community like that, it's really key. And I know you're part of different women's group. I think it's Wealth Wise Women. Is that correct?
Yeah.
Awesome. And tell us about that group. I mean, it's really important, I think, that we get more women into the real estate space to be able to permeate the community, because they have so much value to add in a lot of different ways that us stupid men don't understand sometimes. So
You said stupid, not me.
Hey,
But there are so little women in the space that actually in emails, literally every single day, someone calls me John. Well, it's Haley, but nice try, Then they meet me and they're like, oh, are you John's assistant? And I'm like, no, I'm Haley John. Come on. So there's just really not that many women in the space. So it was a mastermind event. I think we were in LA. We were having lunch after the event, me and a few of the ladies. And that's where the idea came to us. One person focuses more on like mobile home parks and triple net leasing. One person focuses on oil and gas. I focus on multifamily. So we're like, wait a minute, every woman at this table does something different and unique. What if we came together and we offered a place for women to empower them to build wealth, but also give expertise in all the different asset classes of commercial and alternative investing, because we all have a unique story. We all have, two of the ladies, me and one other, we had a spouse that passed away, and We all have our own stories of how we came from nothing. And I think women need to hear that. And most
Right.
women, they actually end up, they're the ones taking care of the families after someone dies. They're the ones that end up handling the finances. And currently today, most women don't know how to do that. Even I,
Right.
like when my late husband passed away, I didn't even know how much our monthly living expenses were, which sounds a little silly. I was a smart person. I don't know why I didn't know.
You had someone handling that piece for you, and you didn't have to worry about it, at that time. And then all of a sudden, it gets thrown on your plate, and it's really crazy. I look at what my wife does, and she not only works, but does bookkeeping work and things like that. But she, taking care of the kids, taking care of me, when I get injured, stuff like that, and just. Being able to hold the entire family unit together on top of doing great things and being able to I guess hit their own goals and things like that too, and hit her own goals in this is really key. And I think a lot of men realize this once they mature past a certain point. I think maybe 35 years old is when they start to mature. At that
40,
point,
I
but
would
yeah,
say.
maybe it's 40. It could be 40. So maybe sometimes a little older. But you realize this and realize how important that piece is to hold society together as a whole, and at the same time being able to do great things like you've been able to do is pretty inspiring to say, hey, look, no matter you have all this other weight on your shoulders with the family unit, with everything else, you also can do amazing things and change the world and be able to build this. And so how do people get involved with the Wealth Wise Women group and find you guys with that?
We have a Facebook community group, so go to Facebook and type in Wealth Wise Women and just request to join there. And we have 2 monthly meetings. One is deep dive educational, one is more networking, and that happens every month. We have 2 large summits every year where you'll get to see people in person. And it's a very non-judgmental space because we are mostly moms and wives, and we're all still going through the same struggles. So it's pretty cool to build that non-judgmental space.
That's awesome. And how do people reach you, Haley, if they want to find out more about the multifamilies you're working on, or get to know you and work with you at some point?
I would say find me on LinkedIn. Haley John
Okay.
on LinkedIn. I'm also Multifamily Mama on Instagram.
Nice. Awesome. Well, thank you so much. This has been an actually amazing experience to talk with you about this stuff and see what you're into and what motivates you. And, empowering and helping women like you do is really inspiring to be able to see that. And I commend you for pushing that forward. And I can envision your dream of building these different communities in different countries of the world. So thank you so much for your service to society as a whole. And I'm looking forward to doing business with you in the future. I know we're part of the different masterminds together. So thanks so much for joining us today.
Thank you, Matthew.
Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. 3 of the key pillars to becoming a successful real estate investor. Number 2, you can join us on our mailing list where you'll get tips and tricks on real estate investing directly to your inbox. And number 3, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.